All good. So today we are going to be doing ISA 220, which pertains to quality. But before we continue with the ISA, I'm going to basically take you to some pages of Big Four firms, and then we will see that the entire focus of these firms, even in their material on the website, is about audit quality. Okay, so let me type EY Canada. You can type any area, any firm. I'm just typing EY Canada for now. Okay. Now, let me go to my services. Let me go to assurance because obviously we are studying audit and assurance. And here we are going to go to audit services. Okay. Now, just study the wording of this entire um, page. You will see that they are saying our work is of the highest quality, we ensure quality. So let's see. We provide, we provide high quality audits. Okay, again, quality that serves the public interest by promoting trust and confidence in business capital market. See, that makes sense, right? If, for example, you're not doing your job to the best of your ability, your quality of work is low, which means your audit opinion may be erroneous. Now, someone who believes in your audit opinion may be at a loss because if your audit opinion is not done with the utmost care, then maybe people can lose money. Okay, so this is saying the EY investment in audit quality. Okay, now they're trying to tell you that how do we invest in quality? We say that it begins with a global network of audit professionals. Okay, they are saying we have the best professional people, depth of business experience that support sustainable long term value creation. So it's saying we also know the businesses in detail, we understand the business so that we can correctly identify the risks, and we have the best people to do so. Our multidisciplinary teams, okay, multidisciplinary means different, expertise, deliver independent audits. We saw this that independence is necessary. We had a little discussion in our earlier sessions. We're going to be seeing hopefully code of ethics later on down the line in much more detail that benefit investors and the broader economy while also bringing independent insights to both the management and the audit committee. So audit committee is basically a subcommittee through which you have non-executive directors, and basically the head of internal audit also reports to the audit committee, and it sort of is like an independent board area in which different issues can be reported. Okay, we're not going to be going into detail, but let's just see serving the public interest. Our top priority continues to be serving the public interest. Now, what do you mean by public interest? That obviously public puts money, like for example, via the stock exchange, right? So obviously you have to protect that investor interest by executing high quality, again, high quality, data-driven audits with independence. Okay, objectivity, we studied these terms earlier. Objectivity means to be unbiased, and professional skepticism. You have to be alert all the time. Okay, now if I go to the page again, our commitment is the first thing that pops up to audit quality. Read the EY Canada audit quality report to focus on how quality underpins everything we do. Okay, so I mean, they have an entire statement on audit quality. We embrace our responsibilities as independent auditors to perform high quality audit that promote trust and confidence in the capital markets. We are pleased to present our audit quality report, which reforms EY Canada's commitment to continuously improving the quality of audits and to strengthen our system of quality control. Our commitment to audit quality is unwavering, motivates us to continuously improve. As leaders, we set clear expectations for all our professionals about meeting our high standards for audit quality. Also follows a culture of integrity based on strong ethics and a shared values of respect, teaming, and inclusiveness. Okay. So again, then they have an entire detail of how audit quality is done, right? What's the inclusivity areas, right? Commitment to the public interest, key metrics. You guys can, look into the pages. Then these are the key people who basically are the senior level people in the organization. And the reason they're telling you is that they have the senior people who can basically execute your audits in a timely manner. Okay, so this was an introduction on audit quality. Now, see, like all great companies and extremely high performing companies, obviously everyone will make mistakes. We're all human. But if you have a very sound system for good quality, like in a factory, you have good quality processes. The similar concept applies to an audit that if you can manage the quality in an audit of the financial statements, then your audit will be of a higher quality. And ultimately, whatever opinion you give will also be of a higher quality. Right. So this standard, as you can see, is ISA 220 is titled Quality Management for an Audit of the Financial Statements. Right. Now, it will be self-explanatory. Quality means highest quality of work. As in an audit context, the highest quality of audit. Now, even if I don't read this, I can say that, hey, my work should be checked. The people should be great. The work should be independently checked. People should be continuously trained. The company should have, processes for quality and so on and so forth. Right. So let's see. ISA 220 focuses on managing quality at engagement level. Engagement level means each and every audit you conduct, emphasizing the responsibilities of the engagement partner. Engagement partner is the bigwig in the audit firm. They are responsible, the partners are responsible, and the engagement partner is responsible for signing the financials, by signing the audit report. And ultimately, this is their signature that sort of attests that, hey, the audit report is of a the audit is of a high quality. It is designed to capture the audit engagement is conducted in accordance with professional standards, applicable laws, and ethical requirements. Okay. So it's saying, you're complying with everything, right? So this is the why this ISA exists. The standard complements ISQM1, which governs the firm-wide quality management system, firm-wide, the whole organization, ensuring its element aligned with the specific auditing. Firm-wide means the whole firm. It should focus on quality. And this focuses that the audit is of the highest quality, effective for audits of financial statement beginning on after December 15, 2022. You have to comply it basically. Objective. We auditors' objective under ISA 220 is to manage quality, okay? Which means you cannot let the audit quality go down throughout the auditing game. Like you cannot say, hey, I was way, it's like, hey, I worked out for like 2 days and then I, didn't work out. No, you have to do it like continuously. Similar concept applies to the audit. To fulfill the auditor's responsibilities in accordance with relevant standards and regulations. That makes sense. Ensure the auditor's report is appropriate and reflects the results of the engagement. Makes sense. Okay. So these are the key definitions. Engagement partner. Okay, as I said, he's the boss or she's the boss. The individual responsible for leading the audit engagement and issuance of the auditor's report. If anything goes wrong, it is the engagement partner who will be responsible. So, this is a very, very key point. It retains accountability for all significant decisions, even when delegating tasks or responsibilities, right? So even for example, I'll just quickly draw sort of a hierarchy. Okay. Um, for example, if in an audit firm, the engagement partner, I'll just type P here, is at the top, then for example, an audit might have a senior manager, SM, senior manager. Maybe they will have a larger audit will have a manager, okay, who will be managing the scene. Okay, then they will have an audit senior. Okay, then they will have, for example, one or two audit juniors. Depends on the size of the engagement. Obviously, if you are auditing a large bank or a large organization, then obviously the members and the audit team will be large. But again, so this is a very typical hierarchy in an audit engagement. You will see that a partner, then you have a senior manager, then you have a manager, then you have a senior, who's like this is also known as in the earlier days, job in charge, who used to like sit on the clients. And then you have one junior or two junior or semi-seniors or whatever. As you can see, this P is the engagement partner. Okay. And these people, okay, if all the way to the junior, these form the engagement team. Hope that sort of makes sense. These people are the engagement team, right? So this is known as engagement team, includes all individuals performing audit procedures under the supervision of the engagement partner, right? So the engagement partner is responsible for the primarily the whole audit, and the team is the one who does the job. Excludes external experts and internal auditors providing directives. So it does not include external experts. These are separate standard. Internal auditors are basically auditors employed in the company. They're not external auditors. So this engagement team pertains specifically to those people who work on the external audit engagement directly. I mean, you can engage a valuation person for help or a lawyer, but again, they're not your engagement team directly. Engagement quality review, like right, any manufacturing process. Obviously, this is not a manufacturing process. This is basically your audit process, but you will have a quality control review, quality review. So it is critical evaluation. Okay, so the key word is critical. Just highlight this properly. Evaluation of significant judgments and conclusions made during the engagement. You say, okay, what is the evidence I have seen? What does it point to? Is the evidence looking good? Performed by a qualified independent reviewer, right? So they check your work again. The audit report cannot be issued until an engagement quality control review is issued, right? Is completed, right? So unless and until you can say, hey, the engagement looks up to good quality, the work is good, till you don't issue your audit report, you ensure that the work is accurate, relevance to ethical requirements, the principles outlined in the IESBA Code of Ethics, and applicable local ethical standards governing independence, confidentiality, integrity, and professional behavior. So that's pretty basic. We discussed ethics a little while in our earlier session as well, and we're going to see, in more detail later on. But again, you have to be independent. You have to be honest. You cannot tell the data. You have to be very professional. Resources. Now, see, in engagement team, when you do an audit of the financial statements, you will have human resource, which includes team skills and experience, right? The people, technology, IT tools and methodologies. Like a very common example is like when in my earlier days, we used to have working papers which were manual working papers, right? So that diminished now. Now you have audit tools for my working papers. Now, even with the new data analysis tools, you can basically, and because most of the transactions do not have a paper trail now, like they do have a paper trail, but not like they're like paperless. You can audit thousands of transactions now, Like rather than taking sample of 20 transactions, maybe you can go through the whole audit tools. So these are all dependent on technology, intellectual, templates and checklists. So these are very important. These are known as like the working papers. So you fill those working papers to complete the audit, resources necessary to perform the audit. Right? What are the requirements? Leadership responsibilities. As we have seen over here, that see, it all starts with the boss, right? Your engagement partner is the boss. Okay. If your engagement partner does the job correctly, then obviously your audit is of a higher standard. So, what are the requirement? Leadership responsibilities. The engagement partner is responsible for establishing a culture of quality. Okay. So, culture is very necessary. What do you mean by culture? That you do the job accurately, and the culture promotes quality. Like the firm penalizes people who cut corners, for example, right? So what does it say? Which includes open communication, encouraging open communication and fostering professional skepticism, right? So you have to be very open with the people so that they can tell the issues to you and not be afraid that hey, you're the partner. Setting expectations for team behavior, emphasizing ethics, adherence to standards, ensuring team members understand their roles and contributions to achieving audit quality. Okay, being actively involved throughout the audit engagement to oversee significant judgments and decisions. Right, so you have to guide the team, you have to be continuously involved, take feedback, and make sure that you're on the top of things so that your project, your audit is continuously being monitored. The engagement partner ensures compliance with ethical standards, including independence requirements, awareness of potential threats to ethical compliance, and their resolution. Okay. Continuous monitoring for breaches of ethical standard and taking corrective actions where required. Okay. Ethical requirements. Sorry, my bad. I missed the page. Examples of ethical safeguards include. Right, so this is corrective action. For example, segregating responsibilities where conflicts arise, conducting regular training on ethical requirements. Like, for example, you have to continuously tell the people, hey, you cannot buy the stocks of companies you're auditing. Now you have to continuously train your staff. Okay. Then you have acceptance and continuance of engagement. Now we've discussed that, whenever you accept an engagement, as per our earlier session, you have to conduct an audit engagement terms and you have to draft an engagement letter. But you also have to say, you have to check, okay, see whatever job you accept, right? You have to see that you are doing audit of an ethical person as well. Like for example, you're not doing an audit of a company that may be doing illegal activity, right? So before accepting, so it says before accepting or continuing engagement, the engagement partner assesses the client's integrity. Okay, the companies you're auditing, their integrity and the ability of the engagement team to perform the audit. Okay, can you actually do the audit? For example, if you're about to audit a large corporation with segregated units, and you might have to travel the whole country for inventory audits. Now, do you have that staff? You have to check. Okay, can you actually do the job? Compliance, ethical, and independence requirement. Maybe you should not be owning, for example, any stock in the company. Whether the firm has the necessary resource to fulfill the engagement effectively. Okay. If the concerns arise, resources basically can be human, technological, whatever. So if concerns arise during the engagement that could have led to a decision not to accept the engagement partner must communicate these concerns to the firm, determine appropriate action, including withdrawal. Right. So you might have to tell to the firm, hey, there are issues in which, for example, we cannot continue the audit. And maybe you might say, okay, we might have to leave the audit. The engagement partner ensures sufficient and appropriate resources are assigned to the audit, including skilled team members with relevant expertise for complex tasks. Okay. So you have to make sure that you give the resources And the tools, right? So what are the resources? Team members, obviously the human resource that with relevant expertise for complex tasks. Like for example, if you're auditing an investments area, so you will say that, hey, the senior must be adept at the element IFRS or in treasury audits. Technological tools to facilitate efficient and effective audits. Intellectual resources like audit methodologies, guides, and templates. Right. So you will have again similar skilled team members, technological tools, and intellectual resources. If resources are inadequate, the engagement partner must take corrective action, such as requesting additional staff. Okay. For example, if they're not people, you say, hey, give me more people, adjusting timelines, right? You will maybe say, hey, we only have two people on this area. We might take more than 2 weeks, or even escalating the issue to the firm. You might say to the firm, hey, I don't have enough resources. Give me more laptops, or give me more technology, or give me more people, whatever. But ensure you must ensure audit quality. Now, this is, I think, the one of the very crux points: direction, supervision, and review. Right. So, direction, you have to tell what they have to do. Supervision, see their job, and then once they've done it, review. The engagement partner is responsible for directing the team by clearly defining their responsibilities and tasks, supervising the work to ensure it aligns with the audit strategy, reviewing audit documentation, particularly for high risk areas, significant judgments, and conclusions. So, directing the team, supervising the work, and reviewing documentation, significant judgment, and conclusion. Right. So, you have to first direct the team what to do. You have to keep a check on their work, right, so that they're doing it correctly, and then review the audit documentation. Reviews focus on ensuring work performed supports conclusions reached. Okay, for example, if you're saying there is no error in the depreciation expense, so have you actually recalculated the depreciation for the year? Okay, those things should be ensured. The documentation is complete and appropriate audit documentation. Any significant matters are resolved before issuing the auditors. So obviously, pretty self-explanatory. Professional skepticism in judgment. The engagement team must exercise professional skepticism, which means you always have to be alert, especially in high risk or judgment heavy areas. For example, estimates, in accounting estimates, these are high judgmental areas. So you have to be very alert to these areas. The engagement partner ensures the team remains alert to risk of bias. Okay, such as overconfidence. You say, okay, this is what we know, confirmation bias. So these are basically, your biases, your psychological biases in which any information that confirms what you actually think is true. You say, okay, this is what it is. Impediments to skepticism, maybe you feel like tight deadlines or resource constraints. If you don't have time, they are saying, hey, give the financials tomorrow morning. If you're time short, if you're a time crunch, then obviously how will you be alert? You'll just say, hey, I have to complete the audit. Or resource constraints, you only have one person. Obviously they will be so much loaded that they will might lose their professional skepticism. So you have to be ensure that their team is actually alert to these issues to foster skepticism. Very important. The engagement partner may assign experienced team members to complex areas. Pretty self-explanatory. You put the experienced team member to the difficult areas. Encourage team members to challenge assumptions and engage in open discussions. Engagement quality review (EQR). If engagement requires an EQR, the engagement partner ensures. Right. So encourage team members. Let me just go back to this to challenge assumptions. You say, okay, there is no misstatement, and you can just then debate all of these issues. So if the engagement partner requires an EQR, the engagement partner ensures an independent qualified reviewer is appointed. Very important, right? So the person should be independent and should know that they can understand the audit engagement. All significant judgments, including key audit matters, are evaluated by the reviewer, so that this ensures that there is audit quality. The audit report is not dated until the review is completed and approved, right? So that this will ensure the quality that once say we did an EQR, the audit is of the sufficient quality. Monitoring and remediation. Monitoring means basically checking remediation, any corrective measures. Okay, let me just quickly go to this. Monitoring and remediation areas. The engagement partner monitors quality management activities and communicates any deficiencies to the firm, takes corrective actions for deficiencies identified during or after the audit engagement, right? So the monitor quality management activities communicates any deficiencies. Hey, the work might be inaccurate or the quality might not be there. You have to communicate it to the firm. The firm is basically the whole audit firm, which has other partners as well, other teams as well, right? So that whole firm you have to tell them, and then corrective action is taken for the deficiencies identified during or after the audit engagement, right? Maybe after the audit you say the work is not good, or during the audit you say the work is not of the higher quality. So you have to correct that to ensure a good quality and effective date applicable to audits of financial statement beginning on after it's implemented. And so basically you have to follow this standard. So thank you so much for this session. I hope this session gives you some perspective on the importance of the quality in an audit of financial statements. So thank you so much and hopefully catch you next time. Bye-bye.